The more Bitcoin treasury companies that I see pop up, the ones with different strategies to acquire Bitcoin, different influencers backing them, all sorts of different business plans, all this and that, the more that I realize that MSTR is the clear winner in this space. I will explore why I believe so, all of the different points, and why I believe that MSTR has a serious moat when it comes to the leveraged Bitcoin equity space. My name is Forrest Hodel. I'm a Bitcoin educator, and I do Bitcoin one-on-one coaching. If you need to book a session with me, you can do so through the link in the description. We can cover best practices for security, Bitcoin basics, and beyond. Anything that you want, we can cover it in a session. So with the addition of the key performance indicator that Strategy actually built called Bitcoin yield, and with the other KPI that Adam Back created, which is months to cover MNAV, there's sort of a lot of speculation and a lot of retail interest in these smaller Bitcoin treasury companies because they can acquire percentage-wise, right, Bitcoin yield-wise, they can acquire a lot more Bitcoin relative to the Bitcoin they hold compared to MSTR. And this is based off of percentages, not actual numbers, right? So Strategy can acquire 1,000 Bitcoin, right? And Metaplanet could acquire 1,000 Bitcoin, and they're the same nominal amount, right? The same amount of Bitcoin per company, but on a yield perspective, the 1,000 Bitcoin that Metaplanet got is way higher because they're starting with a smaller stack, something like, 8,000 or whatever they have now, whereas Strategy has 580,000, right? So just different numbers in that way. But when we're talking about winners and losers, I think this metric begins to start to fall apart. It is not enough to just grow the stack proportionally to the stack they already have. It's about how does that reflect in share price? How does that reflect in the market? So does the market favor a faster growing company? And how are they growing that? Metaplanet, for instance, is issuing new shares into the market, trading at a high premium, and issuing shares with their moving strike warrant system. This is incredibly effective without diluting the shareholders very much. But at what point does that MNAV compress? And then what is the next stage of operations for Metaplanet? The same goes down the list: Semler, Kindly, Asset, CEP, 21 Capital. Now with MSTR, they are already past the stage of common share ATM. 21 Capital, headed by Jack Mallers. He's been on a couple interviews lately. He talks about building a Bitcoin business with 21 Capital and this and that, and acquiring a lot of Bitcoin. They're still talking about becoming a public company. They're doing this reverse merger. And in his talks and in his interviews, he has talked about how the equity is the first product of their business. So their first step, once they become public, is to sell equity in exchange for Bitcoin. This strategy is only going to work for so long before the market doesn't reward it. And that's exactly what's happened with MSTR. MSTR hit that ATM so hard last year, and they built up an incredible amount of Bitcoin and an incredible lead in market share activity. So on their options chain and on their shares as well. However, that MNAV started to compress, right? That MNAV started to go down. It's now at like 1.8. It is still accretive for them to hit the ATM or to do the at the market share offerings, but it is less and less so. And again, the market is starting to price that in. So the share price has stayed relatively stable. It's kind of bounced around, gone up and down, but it hasn't gone and moved up really high. Now, MSTR and the team at Strategy, they're steps and leagues above the other ones. So they are already moving on to the next strategy, which is using debt instruments and outperforming the debt instrument with acquiring Bitcoin and Bitcoin's, and the yield and the profit that they make is that Bitcoin appreciates higher than the cost of the debt. They started with a secured debt instrument. They realized how limited that is, how difficult that is, how it's not the way to go. They then went with convertible bonds, which there is sort of this incentive for the buyers of the convertible bonds, the vast majority of them, to work against the company's interest. So they end up applying a lot of shorts with shares, buying the convertible bonds, and doing something called delta hedging with the convertible bonds and shorts on the stock. So they don't work well with the company to bolster share price. So then Strategy moved on to the next type of debt instrument, which is these preferred stock offerings. So they have Strike, Stride, and Strife, and they all serve different niches within the preferred equity market, and they act as permanent debt capital so that it doesn't need to be refinanced, and they're taking money up front in exchange for selling these shares, and they're buying Bitcoin with it, and Bitcoin just has to increase in value more than the cost of the debt. So the question here becomes, is this a moat that Strategy has? Could Semler, could Asset 21, could these American companies also issue preferred debt instruments and take some market share away from Strategy? And additionally, could a company like Metaplanet do that in their own region as well? So in Japan, where they're starving for yield. Now, of course, all these companies could, but the real trick to this is liquidity within the market. So Strategy can only do the ATMs on these preferred stocks when there's ample liquidity and ample volume within the free market trading of these preferred stocks. Strike, Strife, and Stride all trade on the NASDAQ. If Semler was to create a preferred stock, would there be enough volume? Would there be enough interest in this? And I think interest is what really comes down to it as far as the moat of Strategy. I think there's these momentary blips from copycats, and there's interest in those, and some capital goes to those. But I think Strategy is very good at getting interest into its stock. And I think that is incredibly important in this space. That is what drives a multiple to the net asset value. That is what drives the ability to offer convertible type offerings that are beneficial. That is what allows for the creation of debt instruments that wrap up the Bitcoin and sell them to specific types of investors. The other thing here too is all of these companies popping up, their goal is to buy Bitcoin as well. And when they do that, they bolster the price of Bitcoin. And of course, who benefits the most from that but the biggest Bitcoin holders? And the biggest corporate Bitcoin holder is Strategy, and will, in my opinion, forever be Strategy. I see them as holding the most amount of Bitcoin. And again, I've talked about this a lot in my other videos, but they're in their accumulation phase. You are investing in a startup that is finding product market fit. They have found debt instrument products that they can sell to investors, and they can buy Bitcoin, and they are doing an arbitrage. They are saying that the cost of financing is less than the value accretion of the Bitcoin they're able to buy. It's a really simple carry trade that they're doing with these debt instruments. They're able to do it at a level and at a rate that we cannot do as individuals. And they are ramping this up. And I think that a lot of times with markets, there is sort of a winner takes most, and that is because of something called liquidity. Liquidity is the size of the market, and it allows for salability. So because Strategy is the most liquid Bitcoin treasury company with its stock, with its preferred options, with its convertible bonds, it will continue to be most likely that it is in the future as well. Doesn't mean that it's impossible for the moat to be breached or for there to be another company that builds its own moat in some way, but it makes it very, very difficult, right? A moat isn't impenetrable, but a moat does help with the defense of a business plan. We have to recognize that Strategy has 5 years of being transparent about buying Bitcoin, holding Bitcoin, and the goal of buying more Bitcoin. There is no other business with any sort of comparable time frame as Strategy. This is another major advantage and differentiator compared to the other Bitcoin treasury companies. Metaplanet, I think, has around a year or so, and it would be the next comparable one, and the only other one that I'm really that bullish about, to be honest. I do plan on making a video about Semler soon and going through this document that this guy made about his investment thesis on Semler and seeing if any of it resonates with me. But I really think that Saylor and Strategy has that first mover advantage, and they've really capitalized on it to a massive degree. It's important to remember too, when we're evaluating all this and we're talking about debt, you might get freaked out because debt is risk, but they have positioned their debt to be very, very manageable and only come due with their convertible bonds periodically. And it's not for years that these things come due, and they're easy to refinance or to pay off because they're convertible into shares. And the amount of shares that it takes to convert into them is already baked into the share dilution accretive model of acquiring Bitcoin per share. There are going to be future Bitcoin treasury companies, or maybe potentially present ones, that are going to over leverage themselves. They're going to acquire debt that is not structured very well, and they will actually be at risk. But we have yet to see that. The ones that have taken on debt are well structured. They're not going to, it's not going to come due during a bear market and really put them in jeopardy. So a lot of the sort of fear around debt is, again, just vibes driven. It's not actually quantitatively driven, or, you know, it's not really it doesn't have any due diligence behind it, because once you look into the financials of these companies, they're fine. They're actually very good. And you can see that Strategy and their debt offerings are highly over collateralized compared to what is standard in the industries of where they're creating these debt products. And I think to sum this all up, of course, is that Strategy continues to be the most interesting. All these other ones are having flash in the pan moments, and they will be interesting in their own right, but Strategy continues to have the largest amount of Bitcoin, the most liquid markets, and it continues to have the most media coverage because it is the biggest player in the space and the innovator and first mover. So they continue to be interesting. Now, of course, Strategy is great. You know, I'm an investor myself, but if you want to buy what Strategy is buying and get yourself some Bitcoin, I recommend checking out Bitcoin Well. They're a non-custodial exchange, which means when you send them dollars, they send you Bitcoin directly to cold storage, and you can get free Bitcoin on sign up using my link in the description. There's other links to every single thing that you need as a Bitcoiner, including, again, coaching by myself here, one-on-one coaching sessions linked below, the Jade and Jade Plus by BlockStream. There's a link for that. There's a discount, 15% off of the Stampseed titanium seed plate kit, and a 5% discount for the servers from Start9. So check out all those links and get all the stuff you need to be a Bitcoiner, and we'll see you in the next episode of Bitcoin, Not Crypto.